So you're really just seeing the immediate future, So it was really over in the last month that I've said, look, across the board, I'm seeing this, and this. So my sense really is just that I think we're going to see some sort of a momentum shift happen here. So the more it goes up, the more that the passive money has to buy it. And there's always new passive money coming in that has to buy it. So you just get these crazy... And then the momentum chasers say, right, it's going up, so I'll buy it. Siri, what is refractory gold ore? I'm so smart.
Hi there and welcome to this week's Closing Bell. I'm Callum Newman, one of the Fat Tail editors here, joined by the Sultan of Swing, always Murray Dawes. And it has been a very big week in the markets, and over the last couple of weeks Murray has put down a game plan for us, and everything he said is coming true. So we've got the NASDAQ down, the ASX down, the US dollar down. And as part of that, US bonds are rallying, and we've got some big action happening with the Japanese yen, oil down as well. So, Murray, as I just said, everything you've talked about is now coming to fruition. We're going to talk about that in this episode. Then we had a request in the comments last week to do Fortescue as well. We're going to take a look at that and a call you made about iron ore in the past as well, and a little specky that we're going to take a look at. So we've got a big episode coming up. So, Mars, tell us, for everybody watching, everything you've said is coming true. Where are we going, and what have you got to tell us about it all?
Yeah, well, look, I think, why are we putting these closing bells together? We're trying to give people a sense of what my trading model is and how it all sort of fits together and how I help people trade the markets, which is really trading the Aussie markets, Aussie stocks, and usually from a long-only perspective. But I've just noticed on my charts over the last, month or two, I was seeing all of these signs coming up across the board in all of these key areas: the US dollar, the US bonds, that US yen, talking about the US yen carry trade unwinds, which it's not in the papers at the moment, but I'm guessing it's going to be in the papers pretty soon, that I thought that was sort of starting to happen. So it's really just to show people maybe who aren't members of my services, but also for my guys as well, looking at those sort of macroeconomic issues and combining it with my trading model to give them a sense of why my trading model really works and how it does, predict what's happening. But really, when you're looking at prediction, it's the immediate future. So this is where, with my prediction, it's not about predicting every day what's going to be happening in a year's time and all that sort of crap. That's not what I'm about. What I'm about is seeing those moments of inflection points when there's a major momentum shift in the market, which can marry up with some big macroeconomic things that are going on. So you're really just seeing the immediate future, So it was really over in the last month that I've said, look, across the board, I'm seeing this, and this. So my sense really is just that I think we're going to see some sort of a momentum shift happen here. And the reason it worked is really the simplicity of understanding market positioning, understanding when a market's in and out of balance, and what I'm doing when I talk about these points of control that I show people, looking at, which is really just a midpoint of a range. So prices are trading, everyone's getting into positions, and the midpoint of that is where most of the trading's going on, and often that's like a magnetic point around which the market will oscillate. So last week when I said that the NASDAQ was probably going to fall 7%, that 7% was going back to the middle of the range, which was related to that last August when we had the carry trade unwinds.
The first time.
So that's what created the first wave down. And then we've had a rally since then, which has gone above the high. And this is where I talk about the market, fooling everyone, where it'll have breakouts and everyone sort of starts buying it and gets bullish. And then the market fails to carry on and it turns back down, fails below the high. That's what we call the false break. And that's when all of a sudden the market will tip down, because all those people who bought the breakout are then going, oh, actually, it's not going ahead like I thought it would. They all start selling. And then other sellers come in. So all of a sudden you get a reversal and a shift, which often will revisit the midpoint. So that's as intelligent as my analysis was. It wasn't something bigger than that. It's combining this view of looking at these macro settings, the US dollar, the interest rates as they're moving, seeing the bond yields starting to fall, and starting to ask yourself, well, if the bond yields there are falling and US and Japanese bond yields are going up, we know that last time that was the problem. That's when the US yen really sold off, and we know there's all these carry trades out there. People have borrowed in the yen and they've invested in NASDAQ, and they're making heaps of money as long as everything's going well for them. And when that US yen turns down, what are they going to do? They're going to do the same thing, aren't they? They're going to say, I'm losing money now, so I've got to sell out of my NASDAQ, and I've got to buy back the yen. And I actually think people have been buying bond. I think people have been selling out of the NASDAQ on those carry trades and buying US bonds, which has been why the bond yields have been going down. I think that's been part of it. It's like, let's park some cash because we've got all these borrowings in the yen.
Yep.
We've invested them into the NASDAQ Mag 7. And then if you then start to go, oh, I'm a bit worried about this, why couldn't you sell out of those NASDAQ and buy US bonds, which then gets you settled into just a carry trade, like a bond carry trade, where you've borrowed at 1.5% or whatever, and you're investing at 4%. And as long as the currency's fine, you're fine. But then they might be saying, right, well, now I'm going to sell out of those bonds and buy back the yen because now the US yen is really starting to tank. So now we're seeing US bond yields actually going up a bit. So that would sort of make sense from that perspective.
In terms of the volatility hitting the market, do you attribute any of it to Donald Trump and the tariffs, or do you think it's all
I think that's all. It's all part of it. Like, I think these are all like momentum. Things there's inertia where things will keep going the same way they're going until hit by an external force. So the markets will trend. Like, we know all this passive money's there. And I'm going to be talking about, like, Commonwealth Bank is looking like it's starting to crack. So Commonwealth Bank's a great example where it's gone vertical. All the brokers are saying this is way overvalued.
Absolutely.
But you've got this flood of passive money that, as Commonwealth Bank is, what is it now? What percent is it? 8%, 9%? What is it percent of the ASX 200? Who knows? But it's got to be high.
Huge, yeah.
It's got to be huge. But as it goes up and it becomes a higher percentage, all the passive money has to buy more. So the more it goes up, the more that the passive money has to buy it. And there's always new passive money coming in that has to buy it. So you just get these crazy... And then the momentum chasers say, right, it's going up, so I'll buy it. So then you just get this flood of money and it goes up, 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 up. But until something happens that can change it. And so maybe Trump's tariffs, the fear over that, and this is where the bond yields, what he's doing with the Doge, all that sort of stuff. So once the bond yields start really falling, currencies start falling, and that's when you've got the big international fund flows that you've got to understand what's going on there, which is really not that complex. But once you get that little jigsaw going of all those pieces, and you understand the technical analysis, which is just how people are positioned, and the fact that the trend's either flying or the trend's possibly reversing, false breaks, that sort of stuff that I show people in all the videos, you can sort of put together that jigsaw, and every now and again you can see it all quite clearly. But then most of the time, like everyone else, you're scratching your head. But once you start to understand the language of the market, of what's really going on, you can't understand everything. Like I couldn't know what you're about to say, even though I understand English. But if you start talking, I might be able to guess the end of your sentence.
Yeah.
And as long as I can guess the end of your sentence, in a market point of view, I might be able to put a trade on. Say, I think the momentum could shift here a bit and things might move. And that's all I've seen in oil, thinking that it could really collapse, which is happening right now. The US bond yields, it's all the same thing of momentum shifting. It's overbought, and then there's some sort of midpoint where I'm saying, well, there's probably a high probability you're going to get some sort of mean reversion event. And the way that the interest rates move then affects all the fund flows. So it's not really rocket science, and it's only every now and again that it all sort of comes together, that jigsaw, but that's sort of what's happened in the last month.
Well, you alluded just before we started you were talking about iron ore a while back, and somebody asked about Fortescue, so let's just table that for a second. Now, I'd say a month, maybe even longer ago, I was sort of tabling iron ore as a potential contrarian idea, in the sense that it had been really beaten up last year and it was holding about $100 a tonne. And I thought, well, you know what, there's always a chance, because the market often does what nobody expects, right?
Yeah.
Everybody had written it off. And because they're so profitable, I quite like those big iron ore stocks for having a look at. And you go, well, look, if China came out with a big stimulus, they would respond to that, and you'd get a pretty good entry because they're beaten up so much. But tell us what you saw. When did you do your iron ore commentary? Because you were basically called the top of the market. April last year.
April, May, when iron ore was up around 120, 125 bucks, was when it first really started to give that sell signal. So that's when I said, watch out in BHP and Rio and Fortescue. Fortescue was about 24 bucks then.
We should say there's been big drawdown there. It went down to like 15 bucks at one point.
It's about 16 bucks at the moment. Yeah, it got absolutely hammered.
Do you want to bring up the chart? We'll have a look for our subscriber there who asked about it. So I know when they came out with their recent results, they cut the dividends, so it was looking quite juicy there, but they've pulled that back a little bit.
So first of all, I'll show you the lots of squiggly lines on the Fortescue chart from...
Is this a weekly or...?
No, this is from last April or May.
Right, so it's a monthly
when
chart.
I actually did... Yeah, it's a monthly chart. So this is when I did that video, and this is just a screen capture from the actual video. So you can see that Fortescue up at 24 bucks at the time. And again, what I'm talking about, these mean reversions, where I talk about, I was talking about the fact that Fortescue had this massive run and a failure in the last few years, and I was just looking at the false break. There's the buying comes in, everyone gets bullish, then the selling came in, we got the sell pivot, and I said, look, iron ore is looking weak, we've got a major false break here, I'm expecting it to move back at least, you can see the line I actually put in then, last year, back to the midpoint of the range, and that was about 20 bucks, so that was my initial target on what would happen. So if we have a look at what Fortescue has actually done. So here's the chart of Fortescue today. And so that was when I was doing the video, where it's up about 24 bucks up here. And I was saying, look, it's going to go back to that midpoint at least. And now what have we seen? We've seen a lot of work, like it actually bounced off what is the buy zone of the range. So here's your initial range there. There's your buy zone of the range there. So we saw an initial bounce out of there, back to the midpoint, and now here it is failing. So that's actually pretty bearish. That's, for me, no way of knowing that I could buy that at the moment. And the way I'm looking at that is potentially it's going to even break below the low of the range from a few years ago. So the way I'd look at this would be that there is a chance we see a collapse. And remember, in China, they've just announced they're going to lower steel production because there's actually a glut of steel in China, and they're trying to export it, really dumping. And now you've got America pushing back with really anti-dumping, and worldwide people trying to do anti-dumping on the Chinese steel, which is subsidised and cheap, and they're producing too much of it, and they're trying to export it. So we're having all of a sudden their steel producers over there are losing money, and so they're going to crunch that. So iron ore potentially could really fall.
And I was going to say, when I was talking about iron ore earlier in the year, the inventory levels in China are really high too. They've got plenty there. So I think too, the other problematic with iron ore, even if the price holds, it doesn't have a growth story to it. As you say, like Chinese steel production's peaked, even BHP says that.
And is it Samandu that's coming on?
You've got the West African mine. So there's just nothing in terms of the opportunity cost. You could be in gold right now. It's very profitable. We can see sort of the chaotic situations around the world. Then the demand for gold is really high, and it's like, well, iron ore just doesn't bring that to the table. That was always my concern with it.
And also, it's held in there really well. And with the Chinese property deflation that's going on, they still had a hell of a lot of buildings that they still had to finish. So buildings take years. Yeah. They take years to do it. So even though they know it's all crashed, you're still in the middle of building. So you've still got the demand there. But if the property market's still on its knees and you get a lot more product coming onto the market which really didn't want to get built because it was overbuilding, does that mean the construction actually really goes down and the demand really goes down? So maybe we've got a few years of really being in the doldrums. So iron ore could fall further, which would be saying, BHP, Rio, still a bit iffy, and Fortescue there to me looks
well. It's a pure
quite dangerous.
iron ore play. I mean, at least with BHP and Rio, they've got their copper angle, so at least they have that aspect to the business. It's not as big as iron ore, but they have some diversification where Fortescue is just pure iron ore, so it is vulnerable. If it's going to go, it'll really go down. So, well, we'll say for our subscriber, there was nothing to get excited about with Fortescue as such. What was the little specky that somebody was it Rocks Resources?
Yeah, Rocks.
Do you want to talk about that one?
Little Goldie. All right. I actually do quite like this one.
Now, actually, as a background to this, the gold sector is probably the strongest one on the ASX right now. There's been some ripping trades. You got a fantastic one away in Black Cat that's been running for a while. How's Rocks looking?
Well, this one is starting to come. No, it's the developer with a project that's probably going to come online the next few years. But it's what is it? Disseminated ore? What do they call it?
Can't remember.
The ore body is where it's really disseminated through. What's it called when it's Siri? What is refractory gold ore? Gold is difficult to extract. Yeah, refract. That's it, refractory. So it's more disseminated. Ultra-fine gold particles. There, done. I'm so smart. And look, I actually did mention this recently in a closing bell as one to keep an eye on. And I think it is starting to come to life. There's certainly some buying has come in. We know that, in the gold plays, the little ones are starting to move because gold's been so strong. It's all been the big players, the producers that have been flying. And now with oil prices collapsing, the gold-oil ratio is flying higher.
Absolutely.
So costs for all those sort of businesses going down, so their margins increasing. So these little projects are now starting to look interesting. And Rocks Resources, they've got a project which is refractory ore. And usually people are pretty scared of gold that's disseminated very fine. So
it's more complicated, right?
It's more complicated to get out. But they're going to be using the Albion process, which is apparently a way of getting refractory ore and getting a good result and doing it cheaply. So if this Albion process, which has been proven in other projects, does really work, this one could be a real boomer. And I think maybe investors have been a bit sketchy on the metallurgy and whether it can get up and running. But based on the numbers and what it could be producing in the next few years, I mean, it could be a really great one.
Well, this is like classic bull market stuff, isn't it? Where the high price, the momentum, it starts to drag every project up, like we saw with lithium a few years ago, where at the right price, everything
looks
viable.
Amazing. Yeah, you'll do a few numbers, you go, oh my God, they'll be making $1 billion in a year. So yeah, but I quite like it if this Albion process really does work. I think the project actually does look pretty interesting. And if we just look at the technicals. Pretty clear, 2019 to 2021, massive run, up to $1.40 or something. And as has happened in so many stocks, the complete crash. But, with these crashes, I'm looking for that, 75 to 87% retracement, which is where you get the big clear out of positions. Everyone sort of gives up the ghost there.
Well, we should say too that with a lot of the very small mining stocks, they all collapse. Like, it's not specific to that.
Oh, no, everything's been drilled. And everyone would know that at home, I'm sure. Everyone's got a few in the bottom drawer that they'd prefer they didn't have. So the way I look at this is, we've had the clear out, we've had the crash, we've also had the first wave higher. And with these sort of stocks, after they crash, you often have a rounding bottom because it takes a long time for the fatigued investors to get out. So there's a lot of people who've bought this stock at $1. They're hoping it's going to bounce. They saw it bounce, recently it bounced up to 40 cents, and all of a sudden it starts selling off again. Those people start going, oh, I've had enough of this, and then they start dumping it as well. So you end up with sort of what is classed as that rounding bottom, which I do look for in a recovery phase. That's where you've got a long process of bottoming out, and we've got that long process going on here. It's gone to retest the low again. We've got the monthly buy pivot come in. We've also got the long-term trend shifting to up, and we're seeing constructive buying on a monthly basis. If we look at this up close and you just see how that's trading, you can see that there is some steady buying starting to come into the stock finally. Is it high risk? Yeah, of course it is. It's one of those ones you put a few bucks in and maybe you haven't got a stop loss on it, or or you get out at 10 cents or something. But it's one of those ones that I think if they can get it up and running, gold maintains its sort of strength, and this Albion process does work out. I think it looks pretty interesting.
Well, we saw this week West African Resources, which is a much bigger stock and profitable and cash flow positive, but it got very good response to its results on the market. So there are opportunities out, even though the general market is selling down. Gold still is sort of set up for all the gold companies to release that positive news, whether it's drilling results.
And I think silver's ready to play catch up too. I'm really got my eye on a few little silver stocks at the moment.
Yeah, I've noticed a few of them rumbling, and I know Brian he's got these key price levels, our gold analyst colleague here. So yeah, silver is probably the sector to watch for the next.
Yeah, I reckon. So, yep, because above $35, I think it goes.
Precious metal space.
Yeah, I think above $35 it goes straight to 40. And there's rumblings. The other day it was up 2-3% when gold was flat on nothing. So there's some buying about, and I know there's a bit of a dislocated market in silver, and it's really been the demand's been outstripping supply for a few years. So that one, I think it's getting ready to play catch up, but its timing's always the problem. But I reckon the next few months it could be on.
Alrighty, Moses, thanks for that. We'll leave it there. So we'll just wrap up. You said last week you'd think the Nasdaq would go down 7%. It's gone down 4% already. So still that selling pressure across the markets. A little bit of a conservative stance in terms of trading. Is that the general?
Yeah. I'm backing off. I've sort of got raised some stop losses on a position. I've backed off from trading too much, and I'm sort of sitting back to see how far down it goes, and then maybe start picking up some bargains.
Yeah, and from my perspective, the interesting thing about these type of periods is you do get a look at which stocks don't sell off, which is always very instructive. So we'll float a few ideas in the coming weeks there. So, alrighty then, thank you for watching. As always, give us a like. If you want to hear about a particular stock, get most to chart it for you. Drop it in the comments. Otherwise, we'll see you next week.
Cheers. See you guys.